Welcome back. Joining us virtually this afternoon, we have our financial expert, Nick Sapienza. Nick, good afternoon. How are you doing today?
Hey, Taylor, doing good.
It's good to have you back. So today's topic is a pretty interesting one. We're talking about the lumber and housing markets right now. So what's the deal? What's going on with this?
Right, yeah. So to put it as simple as possible, higher demand equals higher prices, sky high if or when supply is an issue. To take it back a step, the pandemic has caused a seismic shift in the adoption of products and services, Zoom, delivery services and whatnot. For real estate, for a lot of people, this forced the realization that location doesn't really matter as much as it used to in this new, maybe new virtual world. Plus, you have historically low rates, so real estate is basically going parabolic. Then you have lumber, which is everyone's main focus right now. It's obviously a major component of the house. It's a pretty hefty component of the overall cost for building the structure. And this is a conservative industry that was burned badly in 2008, hasn't quite recovered as maybe it should have over the last decade. So when the pandemic took over, they backed off and that killed supply. Now they're trying to catch up, but they're going to do so carefully so that they don't get burned again. And here's where the context helps, because I've gone completely down the rabbit hole on this topic because I'm in the building phase myself. For years, people have been saying that lumber is undervalued, it's going to go higher, it should be priced higher, etc. And because of what's happened over the last year, this perfect storm, rather than trending up slowly over time as most things normally would, it's happened all at once, all in one shot. And that it is because of this massive acceleration in demand, and that can cause some, as we've seen, some pain to adjust. But the cure for high prices is high prices. You'll likely see it run higher as the futures markets have decided to treat this as more of a fever and let it run its course. And eventually demand should fall back to, demand should fall. It will find its equilibrium, but I wouldn't expect it to go back to pre-COVID levels without something really major happening that really staves off prices and demand. So my takeaway is that the new norm is higher prices permanently, somewhere between pre-COVID levels and where we are now. But because of the location thing, this is a generational shift for real estate. If you're running calculations, I think a few things would have to happen. One, buying, you should see the supply of homes increase pretty soon. Number two, building, if you think about how much prices could decrease and if you'd be able to get in, it's how much money would you save and would it be worth it? And then three is accepting higher prices and moving forward. So the good news is, while it's not ideal, you're likely financing at super cheap, super low interest rates. And there's not going to be this world. The way I think about it is there's not a world that exists where I get super low interest rates below 3% plus a cheap cost to build. That doesn't happen because this is how markets work. So I have to move forward with the way the real estate world is. Maybe you can wait a little bit. Maybe that makes sense just psychologically to give it some time. But this is the way the real estate market is at this current point in time. And it's likely not reverting back to where it was.
It sounds like a bit of a roller coaster for this market right now. Nick, thank you so much for joining us virtually this afternoon and kind of explaining what's going on with the lumber and housing markets.
Yeah, absolutely.
If you guys want to learn more or rewatch this interview, it's going to be up on our website, klaf.com. Before we go to break, though, let's check in with Adam Olivier.